What's going on, guys? Dylan here. We're going to talk about some Bitcoin. And yes, we got the mullet perm going crazy these days. It's just gets bigger and bigger every day, like my excitement for the Bitcoin and crypto cycle. So if you haven't been under a rock, even if you have, welcome. But you've seen Bitcoin go up from the low 60s to pushing into the 80s just over the past basically week. And this is very exciting, but it's also a very pivotal time when it comes to Bitcoin, the price, the bull market, the bear market, and this crypto market, because what everyone's been predicting and what the 4-year cycle, which has been pretty spot on, has been predicting is that Bitcoin would hit its bottom, right, the low, around the beginning of October. Now, I will say that could extend out to December, depending on how a few things shake out. If the 4-year cycle plays out similarly. And it is so far. However, we did have just a couple things, and I'll talk about the price levels we're at now, what we're seeing, and what type of impacts have come up in the past couple days that can maybe give you some more information so that you can make your own decisions. I'm having my AI run it right now. And by the way, if you want to learn how to use AI to tap into the data, to build systems, stuff like that, click the link below and join the arsenal. Okay, so here's the situation, is that Bitcoin right now is at a very precarious position because it had this massive short squeeze towards a time where actually everyone thought that it would go down. Everyone thought that it would capitulate and fall under 60K and move in to put its new lows, right, and have that final flush leading into September and October. And historically, September hasn't been a good month for Bitcoin. And so everyone thought that, hey, this is lining up, we're on track for that 4-year cycle. And then all of a sudden Bitcoin's like, nah, I'm gonna mess with you guys. I'm gonna change some stuff up and make you guys think that the bull market is back on. And it's done a decent job with that. Actually, let me give my AI a quick update right here. I'm just gonna say pull up the new document. And this will be in the arsenal, stuff like this. I can't share my screen. I'm using my DJI here. I can review. There we go. So anyways, just tell my AI to do stuff there. And again, really cool to have tools like this cycle versus last cycle. That's going to be a big difference for a lot of people that actually tap into that, right? That learn how to use these. It's also probably going to have an influence on how things move and the speed at which things move and the opportunities, because more and more people are going to be using this as a trading strategy. It's kind of like technical analysis. The more people that use it, the more influence it can have. But anyways, so Bitcoin popped up and it was looking like it could be a bull trap, and it still could be a bull trap, but it's sustained at these levels, right? It's sustained high, it didn't just crash back down. And as of a few days ago, we were in this position. We were kind of like right at like $78,000 for Bitcoin, and it was right at this window where it attempted to go up and break through. We really want to see it break through $83,000 and with conviction, and stay above $83,000 to set us up for a new leg, right? A new leg up, because we're at the end of this squeeze. We've taken out a lot of liquidity here in this zone. And so we're trying to figure out, are we going to go back down, retest, or are we going to have enough new buying and liquidity come in to push us up above that $83,000 level, which kind of changes the structure of where Bitcoin is at and of what we're looking for in the market. Now, if we do, right, that's the key level that you need to be looking at for breaking out above. If we do break up above $83,000, which it can happen, with conviction, and we stay above there, especially if we close above there, we'll probably be looking to have a new leg up, and it makes it much more likely that we are starting the new bull run versus finishing the bear market and going to new lows. Now, we did have some news come out from the Fed, and they really want to get inflation down to that 2% level. And so it was very hawkish, the Fed talking about that. And this was on the back of last week's announcement that the Treasury was going to be doubling their buybacks, I think from like $2 to $4 billion. So that was really big. That kind of corresponded with Bitcoin having this short squeeze event. And then now you have a hawkish Fed. So, you're getting these, back and forth signals, which what else is new? So that is happening. And so Bitcoin has then pulled off. It made a second attempt to try and break out. It made one attempt and was rejected at that $82,000-ish, $82,000 level. And then it went back down, consolidated some around the $78,000, $79,000 level, and then went back up to try and break out, set a slightly higher high, 81,000 something, and was rejected again from trying to break out, and is now pulled back into the 77s. As of the time of making this video, is pulled back into there, failing to break out, perhaps due to some of the kind of hawkish commentary by the Fed. And so that could mean that we won't have another attempt for it to break out without some consolidation. I know a lot of people are looking at that, right? They're not looking to have this continuation up, and then we might see a dip in Bitcoin. I know there's a lot of stuff going on. So basically, a couple levels as a few days ago for this is if we kind of fall under the $78,000 level, right? This was a support level. We're just under it right now. Let me just check the price so I make sure that we're looking at this. Yeah, as of this morning, we are down under this level. We haven't closed the day fully at the time of making this video under that level. So we could see some action, it's a Friday going into the weekend. We could see some action pushing it up back above that level, potentially. Or if we don't, then the next level we're looking at is the $75,000 level-ish, right? And so that's the secondary level here. And if that breaks and we close below that, then we're going to be pushing and testing the $69,000 line, which is kind of what we're looking at as like the bull market support line as of right now. So we have been closing above that. That's all well and good. But if we can't hold that, then the short-term party, or the party that we think we have right now, is off in the bullish direction, and we could likely see some lower prices. I know a lot of people have called for Bitcoin getting down into the 40s and 50s, and this would be the scenario that would play that out. If we can't hold this level, the $78,000 level, that fails, 75 fails, excuse me, we dip down, and then 69 fails, then it's looking very likely that we probably could have the final capitulation. Now, without a bunch of negative news coming out or a bunch of stuff coming out in the next month, because October is getting closer. Even though we're not out of August, the October deadline for the cycle is getting closer. We have midterms. Things can be weird. Announcements can be weird. We have the Iran war going on. There's a lot of weird stuff going on in the market right now that can kind of mess with it. So we could still experience that final capitulation event sometime in the next, 30 to 40 days. If it does happen, if these levels fall, or if we don't get that, right, but these levels still fall, Bitcoin doesn't get that strength that it needs to push up and push through and reestablish itself, in that new bull market, what could happen is it could get extended until the end of the year. It wouldn't be completely out of the ordinary. It would kind of push the 4-year cycle significantly longer than before. So there is that narrative, but it could totally happen. And so let me just see what we're looking like for here. Let's see here. I'm just reading this now. Look at my report. My AI just came up with the report. Okay. So we're under the shelf, like I talked about. And so it doesn't mean that we've actually established a close there. So we really need to look for closes below 75. We're still not there. So we're still not looking bad for the bullish structure. The same other levels are in play. Now let me look at this. So again, a lot of this dip is because the Fed chair, and he was hawkish. And so, what that means is that potentially we could see higher rates instead of lower rates, or rates being unchanged. The Treasury buyback, that's the big thing that was announced last week. And so a doubling in size. So that starts September 9th. So we want to see how that plays out. We want to see if long yields keep falling or if it goes the other way, okay? Then we want to see the FOMC meeting, right, mid-September. So that's kind of made statements today. We'll see how those statements go into action. September, weak Bitcoin month. And so that's something to keep in mind for this, okay? And so it's these levels. So I wish I could tell you exactly how it's going to play out. I will say that if, this is the classic, it could go up, it could go down. If it holds these levels, right, it holds above, 75 and, even pushes back up, another attempt at 82, 83, if we can reclaim that in the short term, that's really positive for a next leg up. And that's what people will be looking to buy in at. The current levels, right, the issue with where we're at right now is that it's at the top of a range, okay? And so a lot of times if you find yourself buying into the market, of course, none of this is financial advice or investment advice, but if you find yourself buying into Bitcoin or any sort of crypto, I'll briefly hit on altcoins in just a second here, but a lot of times people find themselves buying in because they buy in after the mania, right? And what happens is it's already pushed through the zone and it's at the top where it's meeting resistance. And it can work really well if you have a ton of momentum and it pushes through that next level of resistance, and then you can see these massive jumps up, right? You can see that, and you need to be more and more cautious the more jumps up that you have, right? The more resistance levels that you push through for that, because that's when you start getting these massive candles up, and that's you don't want to be doing all your buying in there. You need to understand that you're just riding the trend, and you might be late or later than you would have liked, and so those can end sooner than you would like, often when it comes to crypto. But what happens is it pushes up. People are like, oh my gosh, we're back, and then it hits the resistance, and people are buying right there because like the price stalls or whatnot, and then it drops back down because it wasn't able to break out and turn that resistance into support. And then now you're under on your position. And in a bear market, right, the problem is now you're bought up here, and now the trend's still going to be continuing to go down. In a bull market, yeah, you're under some, but if it just consolidates down, like is one of the scenarios here where it failed to break out of 82, it failing to hold at 78,000, 75,000 is that next level, it can go down there and consolidate. It could even consolidate between the $69,000 and $75,000 range, right? There's a big range there, and it could consolidate there. But that's what you want to be looking at if you're looking to buy, right? Or a better buying opportunity is once it's demonstrated that, hey, it's broken these shelves, it's going down to these zones, and the zones aren't failing, they're actually holding strong, and it looks like it's going to be a consolidation before a move up. Now, on the flip side, if it's going to be a consolidation before a move down, right, if we have bad news, and it starts falling quickly, then you want to be careful buying into those, because again, then you're buying into, catching that falling knife in that bear market, and then patience is your key. But the key thing here is that you need to know these levels. And so I mentioned I would talk about alts, and with alts is that they're not going to get a massive bid until Bitcoin demonstrates that it's going to break these levels. So either Bitcoin going up, breaking through 83, or consolidating down, okay, at those lower levels, consolidating down, and then moving up again with more momentum, so it can start breaking those shelves and breaking those levels. So that would be when alts get the attention, just like you saw over the past week. Alts got the attention when Bitcoin, because it was at that 60 to 65 level, instead of breaking down, it broke up, right? It went up. Altcoins got a lot of attention, but they didn't get as much as like a lot of people thought they would get, because we're still in that bear trend, right? Because we haven't broken that $83,000 level, because we're so close to the end of the bear market, and the typical 4-year cycle end of the bear market, the $58,000 ish bottom we experienced in June wasn't quite at the right time according to historical standards. So a lot of models don't technically count that as the bottom yet. It could be there. You can only really tell afterwards, but timing wise, there's still room for another full bottom and leg down. But the good news is that we are entering into that final phase of, and sometimes, when you're in it, you don't know which is which, right? If we're in the final phase of the bear market or the beginning phase of the bull market. So that's why it's important to understand this, to be paying attention, and to kind of be looking at what's going on, and to be strategic with how you are entering and your timelines with this, and the type of risk that you're taking. And just know that when this market starts up again, and it will start up again, we just got a taste of it this last week, and it can move really fast. The market in the cycle we're going to be in this cycle is going to be dramatically different than last cycle. It's going to be probably wild and crazy, and a lot of stuff is going to be coming out, and a lot of new tools. We have regulation, significant regulation that's going to have a big impact, and then you can't discount the impact that AI is going to have, the speed at which these things will move. And so you have to update your strategies, you have to update the type of projects that you're looking at, that you're paying attention to, and you have to be very diligent for taking profits and being strategic there. I know a lot of people last cycle, they didn't take as many profits, myself included, as they should have or as they would have liked, because it seemed like we didn't have the full moves that you would expect, or people expected in crypto. Okay, like the move would move like 30 to 40% of what people would expect, and they were waiting for that back end that never came. And so I know a lot of people are updating their strategy, their trades, how much capital they're allocating to trades, how much risk they're taking. And so these are all things to think about for yourself when you are analyzing this market and how you want to participate in this market. So it's just good to get educated on that. If you want to start learning about how to use AI to do some of the analysis, make this easier on you, and to make yourself more efficient at getting the right data, or at least putting data together to help make decisions, definitely check out the arsenal below. Teach you how to use AI, and then as the crypto cycle builds, I'm gonna do more crypto specific tools, trainings, and lessons, so you have those in your toolkit, because what I want is you to make more informed decisions and better decisions, because by doing that, you increase your chances of success. So that is it for this one. Like and subscribe and follow along for more. I'll catch you in the next one. Peace.